Hello, community, and happy Saturday, July 11th. Welcome to the weekend update. If you're new here, welcome. If you're a returner, I appreciate you following the trade plans. And listen, stay tuned. I've trimmed some of what we're doing, and I've added a new trade that I like. So you'll see that towards the end of the video. Uh, as usual, if you find this information useful, please like, subscribe, follow, and share it to somebody who could use it themselves. Also, remember, the disclosure is that trading incurs risk, right? You need to make your own trade decisions. These are the opinions of me, a certified research analyst, that you can follow along with and produce your own trade plans. And if you do, please let me know down in the comments. So without further ado, let's get started. Um, let's look at the catalyst from July 6th to July 10th. Really, everything was focused on an AI semiconductor rebound after they had sold off with corporate deals and macro signals and geopolitical noise. We're going to get into all that. The AI semiconductor rebound and corporate AI news. He had like Broadcom, which is AVGO, surged on an Apple chip supply deal extension through 2031. Micron, which I don't monitor on here, had a massive jump on a $250 or $250 million investment by the US government. Memory and AI chip optimism, obviously back this week. And Tesla rose on robotaxi and Miami expansion news. Now, those are all good catalysts, but when we look at the NAS where these exist, we'll see what volume says. All right. Also, we had mixed labor and macro data and FOMC minutes that came in midweek. June report showed a week plus 57,000 payrolls, which was a miss, but claims stayed ahead or stayed stable. And FOMC minutes under the new Fed Chair Walsh and other reads like PMI, home sales were added uncertainty to rates and inflation. So we have some diverging news there, which I think speaks to some of the channeling that we're seeing. Geopolitical tensions, guys, still exist since the end of February with the start of the war. We had news at the end of the week that kind of spiked some things that Trump says the ceasefire is over. There was some attacks on ships in Hormuz. There was some retaliation, but now negotiations are back, and you have some of the other Middle East countries stepping in to cool those tensions. So we still have uncertainty there. The coming week, U.S. bank earnings start with J.P. Morgan. This week. It's really the unofficial start of the Q2 second quarter season um, that we're going to be watching. Expected uh, growth for the full season is 23% in earnings per share in the S&P 500. We'll see if that happens. June CPI numbers will be in, and Fed Chair Walsh has his testimony Tuesday and Wednesday um, in the House of Representatives. Other than that, the only other catalyst I'm really seeing is to keep an eye on is Taiwan Semiconductor, that is TSMC, will be reporting midweek. That'll be interesting to follow because of the tech and AI demand. And then, of course, any catalyst tweet that is done between the US and Iran. I've read reports that the war is going to escalate. I've read reports that there's enough Middle Eastern countries on board that it's going to de-escalate. But we as traders and investors, we're walking through a landmine field right now with this uncertainty. So let's see what the charts say, guys. As usual, we're going to start off with the indices. Um, The Nasdaq, we predicted this top back when price was in early May. I said that we were going to hit between 30 and 31,000 as a top, which I've been correct. We've tested that field multiple times, and then it becomes a dance around the all-time high anchored VWAP. You see how prices can selling in and above that. We early in the week we sold down strongly, and then we rebounded after midweek to close above it. So technically, that is a buy signal above the all-time high anchored VWAP. It is a 2-day closed filter of that. So which does signal a buy, but the thing I want you to notice here is volume really isn't supportive of this upward move. Can it continue to go up? Is this low volume because it's diverging from price, or is it because it's vacation season in July where volume is typically lower? It will be remained to be seen. One thing I want to bring up here is that multiple commenters said that I need to check my education because this is a flag, and flags are very bullish, and we're going to go onward and upward. So, what they're saying, the people who think I don't know what I'm talking about, are saying that this is the pull, this is the half mast, and this means continuation upward. Well, let me drop a little knowledge on you since you don't think I have an education. That, my friend, is not a flag. It does not qualify for many reasons. Number one, a half mast or flag formation must be quicker acceleration, usually 1 to 3 weeks, right? If I switch to the weekly, this acceleration occurred over 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks, which time disqualifies the pull. Also, the half mast pennant or flag is formed in a very fast. Remember, the half mast formation is an accelerated uh, formation that formed over 1, 2, 3, 4, 5, 6, which is actually much larger than it needs to be. So, for those that think this is a flag, right, I'm telling you that it is not. That does not mean that price can't continue up, but not at the measured amount that we could predict with a flag or half mass formation. So if you looked at that and said, "Hey, student alpha, that may do you think that's a flag?" My answer is no, it's not, and here's why. For you assholes that said I don't know what I'm talking about, how about you go through CMT school and you learn that that is not. Commiserate with the Nasdaq and my resistance zone, I have begun to size into a short of the Nas by buying SQQQ. You can see I'm underwater in my first entry at where I'm about 42.35, and I'm underwater right now, and I'm comfortable with that because I do believe we sell down, and I will size into that, and I'll let you know when I add more. I have not added more because since my entry, we are channeling, and you see that channeling in the Nas. The S&P 500 closed strongly on the week on lower volume. Same story. We tested the all-time high anchored VWAP, and you can see we pierced it here. And guys, this is known as a false break of that all-time high anchored VWAP. It has to close below it for it to be a significant sell-off, and this was not. And we've risen back into my identified zone of resistance between 75.50 and about 76.22 at the all-time high. We'll see what sellers say at this level. And this is probably going to have a lot to do with how earnings come out this week. But we are in the significant all-time high resistance zone, and we're going to have to see how it plays out. In order for this to continue through this, volume will need to pick up. If we get doji formations, that is compressed candles with increasing volume, we will direct back downwards from this. And I like this runs anchored VWAP as a price target down around 7,300 if rejection occurs. And of course, we have to identify this zone as support before we get there. Guys, all trading is a hunt for support and resistance and then how to trade plan around it. The Russell 2000 looking historically very strong, but showing weakness for the first time in a little bit. You can see that last week it set the all-time high, and then that all-time high anchor VWAP where we put it on July 1st candle. So a little over 10 days ago. And now we're forming this all-time high anchor VWAP where price is rejecting down there. Downside support will be about 28.50 if we reject out of this predicted all-time high. Now I predicted this all-time high resistance zone, which we broke above it and then swung back into it. And if you look at it on a weekly time frame, you'll see it was less of a strong move into that, and now it's starting to sell off. The small caps have benefited from rotation out of tech and into small caps. We'll see what continues here. Right now, we're just seeing consolidation at these all-time highs. Bitcoin, I like to mention it because so many of you guys follow it. Again, stay out of it. Support zones 58,000 to 6,000. Cycle low 50,000. Sound like a broken record because for weeks now, it's doing the same thing. This is not a buy. Ethereum is rebounding off of its low that it set back towards beginning of June at 1500, and it's really only risen 300 points, but volume is low. I am not interested in buying Ethereum now. I am an interested buyer in Ethereum because I like the product and I own a lot. I've set alerts at down here below 1400 and 1000 where I will add to my long-term hold of Ethereum at those levels. And of course, when that happens, I'll let you know when I add that in. Oil. Oil steeply dropped over the last couple of weeks with the ceasefire, and then midweek with some of the tensions rising and some more bombs flying and explosions happening. It rose off that response, and actually Donald Trump tweet is what shot this up. And then other Asian companies or Middle Eastern countries stepping in to help ease tensions, cool it back off. But I want you to show you something. I identified this gap way back when it happened, and I said that will be support. Can you see exactly where price stopped? When you learn to do this, guys, you can never unsee it and you can trade plan successfully. If you want to learn how to do this, reach out to me. I offer many courses on how to get this and learn it and understand it. All right, guys. So for now, I see kind of 67 as our bottom dollar until this is all resolved with maximum upside resistance right now at 84. If anything kicks off, we will run right back up to that all-time high anchored VWAP for a test. So trade plans, you could buy around 67 with a dollar or two stop loss if you think tensions are going to increase, and then sell up here around 84 with a trail. All right. If peace happens, we break this level and go back to pre-war pricing at 55 to 60. But even if peace breaks out, I think we're going to be a little slower to get there with some of the supply shock. Google, we're still on a hold and wait. I'm interested in Google down around 300 to 315 in this zone here. We have to be patient and let price come to us. Microsoft, same story. It tapped into this identified support zone twice, right? If we get another test, the more times we test a zone, the more, and this is a buy zone. So the more buyers who are satisfied at this zone, when sellers push it down, there are less buyers to defend it, meaning that we'll break that. So I'm interested at lower pricing, almost similar to Google. Like I said in my last update, $300 to $320, and I'll let price come to me. And patience pays, folks. Patience pays. If we get strong buy signals that it's moving up rapidly, we'll reanalyze it. But for now, I'm demanding a discount on entry into Microsoft. BBAI, we're waiting. It is not a buy, it's not a sell, it is a wait. I'm interested down here in the mid $2 zone and have been for weeks now. You can always go back to my previous weekly videos to see my past analysis to say, oh, you just made that up, Sean. No, I didn't. I can't make any of this up because you can go back and look at the recording and see whether I was lying or not. So I'm interested down here. AI, some of our AI plays that have paid in the past are strongly beaten up right now, and that's fine. We're determining winners. Like when everybody came out, everybody wanted to buy AI. So the whole sector benefited. And now investors are discerning which companies will last. So we need to be part of those smarter investors. So let's wait and not only see what news and announcements comes out, but see how earnings reports shake out to get our next entry. And that's true not only for BBAI, but that's true for across the sector as we get into some more of these quantum and AI plays. QBTS, we've made money on this once, got out at break even the second time, and now we're waiting for this nearly the same entry level, somewhere between $14 and $15. So at 20, we're waiting to see. So set an alert. Let's set an alert as we're live here. I'm going to set alert as it breaks 16 at 15.99. You should do the same. That way, that is a, hey, look at me, you may want to invest alert. And then if you buy in that zone, you can have a dollar or two stop loss commensurate with your risk. I teach risk planning right? And risk management. If you want to know how to do it, reach out, guys. IonQ, the tale of three trades. We've nailed this and nailed this. We I called to buy off the IPO anchored VWAP and ran it to the all-time high, which paid many of my followers. And then I said you could hold it through that if you reduced your stop loss below this pivot swing. I had a number of traders do that and then trail it and realize even greater profits. Those who waited for the all-time high to break and entered here on this trade plan made either money and at worst got kicked out at break even, which is a psychological win. If you get out at break even, don't lose money. Now that we have failed that and some traders took their profits or got kicked out at break even, we're looking for the next trade plan that is similar to this one, but the price is higher. You can see the average volume weighted price is higher. So we're looking at around 33.50. Okay, that's going to be a zone around it for our next entry. Let's set an alert for 35 to see when that breaks, guys. QUBT is a wait and has been a wait. So no entry until price gets down or breaks that $6 alert where we're going to look at that. We do have market structure support about 625. So somewhere in there, we expect you can see the market structure support that I'm identifying. And guys, I do a lot more analysis on this, more indicators, but I clean it up just for this report, right? So you're only using a couple indicators. I am for the report, but if I put them all on this chart, it'd be hard for you to see on the video. All right. Quadruple U hit that zone and bounced, right? So it hit the buy zone that I identified off of this market structure and actually volume at price. We bring that in. A buy in around 12 to $13 and is bounced. You need to have a protective stop loss at about 11 and a half if it doesn't hold. I'll be interested to see the next test in quadruple U, but right now this is an active trade plan and something that you can benefit from if it hits that zone again. But again, have a disciplined stop loss and we'll reanalyze it if we take the loss there for a lower price because energy fuels, quadruple U in the Trump administration should be a good stock to own under what they like. So there you go, guys. Oklo just the same as tapping into that area and thinking about balancing lower volume. So this identified zone is 42 to 44. So keep an eye on it and how it reacts here. If it hits that zone, we might hit a supply of buyers and bounce back up, and you can have a tight stop loss of anywhere from $2 to $5, depending on what your risk is, because there's a lot of reward to the all-time high anchored VWAP and higher. But notice we are in a bearish period for this right now, and we did break below the IPO anchored VWAP. So we're looking for technicals inside of a fundamental buy. Fundamental buy means it's downtrodden, but yet a good thesis. IREN, IREN. We are waiting on it. I like this buy lower around, we'll call it 31 to 33. Let's set an alert together, shall we? Let's set it for 34.10 as it approaches that level. If it hits that and bounces, we'll still be in a bullish period where the 50 EMA is above the 20, but we'll get a discount in that. So let's keep an eye on that for our next entry. If you own it now, get your stop loss in around 30. If you guys that bought it way down here, $8, $9, and $10, you'll at least have 300% locked in. Now we're going to venture into metals. Guys, a lot of diverging information. Is gold going to run? Is it going to climb? Is it going to run? It's going to climb. We called the buy off of 4,000, ran it to 4,200, which hit. I called the buy at 4,100 to 4,200, which hit. And now we reapproached this week the 4,000 level at 4,025, and we close the week at 4,120. I like still any buys off of 4,000, but remember, like I said earlier, the more times it touches an identified support zone, the weaker that buyers get because they're satisfied. Also note, we just this week set the death cross on gold, right? That is an institutional sell signal. That means this next test into gold could drop. So you want to identify, not only do you want to identify the next lower level, if you buy this zone, which could hold, you want to have your stop loss right below that pivot low, right? Which is 34 or 39.40. If you buy in around 4,000, 39.40 is going to be your stop loss. That way you only incur 60 points of loss to buy it lower. And we have a very strong buy zone down here at 3,500, 3,300 to 3,500, where this long-term consolidation occurred, right? So if this breaks with this death cross, so that is my predicted price. And then off of that, we should hit a supply of buyers. So I will definitely be sizing in strongly in that area. And if you do your own due diligence, you should too. With that, let's look at the um, some miners. Ego is in a channel. Why is it in a channel? Because gold is in a channel. It is actively in around a buy around 29, give or take some change. You need to have a disciplined stop loss. If we get that drop in gold, this will drop down to around 22 or 23. HYMC will do the same. It's touching the buy zone, but will more than likely come down around $10 to $12. So know your next support zone to buy in because it will follow gold. And if the suppliers step into gold that we expect at that 33 to 3,500 level, this will take off with it. All miners will because they benefit. Silver. The identified buy zone of 54 to 56 with the median price being 55 has held. It ran back up to 64, which if you followed my report before, I said 64 was a support and resistance zone. Historically, don't believe me, go watch the recordings. And then hit that, smacked right up against it, and then dropped. This is still the buy zone. We haven't tapped it enough to crush out probably the buyer. So you still have another opportunity here. But again, have a tighter stop loss of a couple of dollars. If it breaks down, right, we could see 45, right? If metals, gold and silver break down, we could see 45. I'm a buyer of physical silver. I buy it all the time. I've bought it from 10, 20. I bought it at 100, and I'll certainly buy it here at 55, and I'll buy it at 50 when it comes in. But remember, the CME products are heavily manipulated. All right. And that's not me making it up. Go do your own research. That is a well-known fact that they manipulate the price of silver. And that's why it decouples from physical silver. Platinum sitting around the buy zone around $1,500. Do with it what you will. I think that zone still exists. Heavy consolidation here. If you can buy off of 1,500 and run it up, tight stop loss, you're good. If it drops with the other ones, you're going to see about 1,250. Palladium, it is rebounding slightly. I'm really not interested until we get down around 1,000. It was an underperforming metal compared to the other ones when all other metals hit all-time highs. Palladium, by my surprise, did not. Right, the all-time high is up around 3,400. So I'm interested a bit more around $1,000 for a swing trade. So as of right now, I'm not doing anything with it, and you can see we have had the death cross in Palladium. So there's probably more downside with this, and even this bounce is lower volume. Copper, folks, as called right here multiple times, I said to buy around that $5.90 to $6 range, and now it's up 20 cents. We will have resistance at the all-time high, Anchored VWAP at about 626. That buy zone will still exist. We may oscillate in there, so you may get another opportunity, but I like that buy. If you buy in between $5.90 and $6, know what your risk is, but it's probably a good stopping point would be 575 if you're an interested in buyer in copper, as the thesis with AI and heavy copper use shoots this to $10 to $12 according to fundamentalists. Wrapping up the report with instruments that I have added that I like, right? And then I own. Lynn has been up and down in the buy zone here, right? So people have bought it in my buy zone, have realized some price appreciation, and now we're at the bottom of the zone. I still like it. That does not change anything. Remember off my previous videos, I said that we don't mind it channeling, because channeling, right, where we're in profit and out of profit, or even at $0, we are gaining this um, dividend as we hold it. And then, of course, the thesis is that if the housing market continues up, we would expect this thing to add 50% profit to our portfolio plus the dividend, running to that all-time high. And I haven't changed the thesis. We're just back at the bottom of the channel. KHC, as identified here several weeks ago, has been a big winner for a lot of people that bought in around $22 to $24. It peaked at about almost 26 and has pulled back a little bit, but looking relatively decent. You see the pullbacks volume declined, but the buy side volume here Friday also declined. We want to see a buy spike in there. So we are realizing a little bit of profit, but again, we are gaining that dividend, and that's the whole goal. The price target for this that I have is somewhere up between 35 and 38, that IPO and all-time high anchor VWAP, where we can realize that much gain plus a dividend during the hold. So that's KHC, Kraft Heinz Company. And I always ask everybody, do you think that American company Kraft is going to go out of business? I don't. So this is great pricing. Our high risk AI play in SOUN has us a little bit underwater, but is showing consolidation support here. We do have a tight stop loss. We're underwater by about 75 cents. Again, I identified this as an aggressive trade because if price spikes to the all-time high, we can get out and that'll start that potential golden cross trade here. If we close above that all-time high and run again, we will get the golden cross. So this is a technical setup on a fundamental buy on SOUN that if you don't like the aggressive trades, don't take it. But guys, do your own due diligence, right? If I take this loss, I take this loss, right? This was an aggressive buy for me based on these technicals and a clear stop loss below this market structure. All right, guys, wrapping up the report. Do you like how I did that? Because the newly added wrap is on my report. Now, every week, this takes me about 4 hours to get this ready. Believe it or not, I do a lot of research. I researched a lot to find a new trade. And guys, I really like this one. Wrap is a law enforcement technology called the Bulla Wrap, but they have recently off this. They have recognized that they are a technology company. They have recognized the gap in drone detection, have bought out some competitors. And you can see, look at this volume spike. It's the largest in their history, right? We are about to have a golden cross if price continues up. What they did here, the Wrap Technologies acquired U.S. and NATO exclusive distribution rights for frontal imaging's sensing tech and will integrate it into Wrap Shield to boost drone detection and public safety. And they have these contracts in many countries. So I think this is going to be an upward trade that I'll be entering at a low price. So I'm going to build it right here, and I'll place, because I identified it on the weekend, I'm going to place this order next week, but I'm going to look to get in somewhere around, if I can get $2 to $2.25. Now your stop loss can be below this candle at about $1.50, or if you want to go wider, you can go down to $1, and we can target the all-time high anchored VWAP or the IPO anchored VWAP or the average between them. So that is a 100% trade. If it fosters out well and we still get explosive movement, because guys, this is great volume. And the arguments I gave you before on why things were in a half mass, this may be forming one, right? We don't know yet, but 100% trade would be outstanding here. This is not a dividend player, so this is not something I'm going to hold long term. But look at this, guys. The all-time high in this company was 14. If we can hold this trade, and one of the benefits of following me on YouTube is that I'm going to monitor it as it approaches this price. If the volume's low on the sell side, I'll try to hold it through this to try to realize more gain. So I'm looking to get in between $2 and $2.25. Maximum stop loss would be $1. If you want to tie your stop loss, probably around $1.50 to $1.75. And we're going to target around $4.50 to $5. All right. We'll be on top of it, guys. And I'll let you know. Let's see if we can make some money. So again, I want to thank you for taking the time to follow me and my trade ideas. Hopefully you're doing your own due diligence. You know how to reach me if I support one of your groups. You can ask questions. You can make comments at the bottom of this video. And I hope you have a good rest of your weekend, and we'll see you this week.